Welcome back to the channel. In the previous video, we talked about the 1 a.m. CRT, which is the candle that creates our initial range. Today, we are moving to the next phase, which is the 5 a.m. CRT. In this lesson, I will break down what the 5 a.m. candle represents, it interacts with liquidity, how we build our bias, and how we use it to prepare for the potential move during the New York section. To stay with me, and let's get into this. Today, we have a particular PDF guide here that I just mapped out for you guys so that you can know how to catch this simple 5 a.m. CRT setup on a daily basis. So 5 a.m. CRT setup is just a setup that happened during the New York time, 5 a.m. New York section. So is a particular time where liquidity is taken, and we are expecting a reversal from either the buy side liquidity or the sell side liquidity. Now, this is a guide on how to trade the 5 a.m. CRT. Now, number one is that we need to understand that when trading the 5 a.m. CRT, we need to understand the draw on liquidity. Draw on liquidity in the sense that you are going to ask yourself, if price is price targeting the buy side liquidity, or is price targeting the sell side liquidity. So the moment you understand this, the easy it is for you to trade the 5 a.m. CRT. This is a very, very simple strategy that when you apply it on a daily basis, you make money each and every day the setup forms. So draw on liquidity is the most important aspect for your analysis. So we need draw on liquidity. We want to know if the candle that is going to form today is a bullish candle, or the candle that is going to form is a bearish candle. And how do you determine that? I've thought about that on my YouTube video on how to determine draw on liquidity. So it's very easy for you guys to learn how to determine draw on liquidity, for you to understand how to take trade using the 5 a.m. CRT. So you can go to my YouTube channel and watch on the draw on liquidity, and also subscribe, guys. I have a Telegram community. You guys can join my Telegram community also, where I'm going to be sharing this PDF for free. Then let's dive in. Now, for you to take trade using the 1 a.m. CRT, you need to understand draw on liquidity. Now, when I say draw on liquidity, what do I mean? Is price closing above the previous day high? We are expecting higher prices. If price is closing below the previous day low, we are expecting lower prices. Then, if price is rejecting a previous day low closed inside the range, then we are expecting higher prices. And also, if price is rejecting previous day high closing inside the range, then we are expecting lower prices. Now, this is how to determine your draw on liquidity for CRT traders. Now, the next step is building narrative. Now, we need to understand that narrative is one of the most important aspects of this particular strategy. And when you build a very, very exquisite narrative in the system or the ecosystem of trading, it makes it more reliable. Now, building narrative and key level, there are two types of narrative, which is the price based narrative, which are the market maker model, the power of three concepts, where we have accumulation, manipulation, and distribution. We also have a dealing range, which is premium and discount. So these are what we are expecting to put into requirement to trade this particular um, 5 a.m. CRT. Now, another thing here is the open, low, high, close of the range. And we have time-based narrative, which is section behavior. Now, we look or trade the 5 a.m. CRT during the New York section. Then we are trying to see how the behavior of that section is for us to take the trade, which is also the intraday profile. Understanding intraday profile and weekly profile is more important. Now, key levels to look for when trading the 5 a.m. CRT, we have order block, we have the breaker block, we have the rejection block, also the fair value gaps. These are key levels, old highs and old lows. These are areas to pay close attention to. Now, when I go into the chart, I'm going to show you guys the simple example on how to take it without a blink of an eye. So now, the next thing to find when you have gotten your narrative and your key level. Narrative simply means premium and discount. When you wait for price to trade into discount, when you are bullish, price comes and tapped into the discount level, and into that discount level we are expecting one of these key level to be formed. Then the moment price tapped into the key level, boom, price targets the candle range high or targets the opposing side of the liquidity. This is how to build narrative and context. So now the third thing to find is the CRT. Now, for finding the 5 a.m. CRT, for the 5 a.m. candle, we have three CRT candles: the 5 p.m., the 9 p.m., and the 1 a.m. The 5 p.m. and the 9 p.m. is actually the Asian section. So these are candles that form during the Asian section. When the market is about to close, we are going to have the 5 p.m. 4-hour candle and also the 9 p.m. 4-hour candle as a range, and also the 1 a.m. candle as a range. These 3 times, this 3 hour is going to serve as liquidity for the 5 a.m. Now, looking at this diagram, you can see here that we have the 9 p.m. candle when the market closed. Now we have the 1 a.m. candle, which is a new day, a new day, in a new daily intraday profile. So the 9 p.m. and the 1 a.m. are going to act as a liquidity for the 5 a.m. So this is how to trade the 5 a.m. Now, when the new candle opens the next day, price is going to move up, clearing the high of the 9 p.m. and also the 1 a.m., forming as a liquidity during the Asian section. Now, the 5 a.m. is the London section slash New York section. So price is going to the 5 a.m. 4-hour candle is going to open, take out the highs of the 9 p.m. and the 1 a.m., then closed inside the range. The moment closed inside the range, then we are going to go down to the lower time frame, look for our entry confirmation, which I'm going to teach on the chart. Then we target the candle range low. So this is how to trade the 5 a.m. Just understand that the 9 p.m. and the 1 a.m. are the liquidity zones. They serve as liquidity area. Then price is going to open, clear out liquidity, then target the opposing side of the range. That is why in this market, liquidity is resting everywhere. The highs and lows are resting liquidity. Now, the 5 p.m. and the 9 p.m. are the central bank, range, Asian range hour. Then the 1 a.m. is the London section. Yeah, the 1 a.m. is the London section, while the 9 p.m. is the Asian section. So price took out the 1 a.m. and the 9 p.m. during New York section, then targeted the opposing side of the range. Now, for intraday profile, there are three potential intraday profile, which is the 5 a.m. for the 5 a.m. CRT. Now, when you are trying to trade the 5 a.m. CRT, the 5 a.m. CRT um formed during London launch by creating the high of the day or the low of the day. That is when the 5 p.m. forms. It creates the high of the day or the low of the day, before targeting the opposing side of liquidity. And the 5 a.m. candle can also serve as a New York continuation, whereby 1 a.m. formed the high of the day, then the 5 a.m. formed as a range, then the 9 a.m., it continues. So, without wasting much of your time, let us go into the chart as I give you guys more example and break it down in a simple manner. And kindly join my YouTube channel and also subscribe so that I can get this PDF for free. Now, let's dive into the chart. Looking at this is on Euro USD. This is the asset I trade. This is the 5 a.m. CRT to be precise. And let me break some few example for you guys so that you will understand. Now, looking at this chart, remember I said that understanding draw on liquidity is very, very important for us. So it is very, 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 very important. Now, I want you guys to understand what happened here. Now, we were having series of break belows, lower prices. Price came here, break below the previous day candle. And what happened? The moment price broke below the previous day candle, you can see that we sold. Now, what are we expecting? We are expecting that the next candle is going to also break below the previous day candle. And what happened? It did exactly the way I expected. Now, looking at this candle here, this is the break below, lower prices. Now, because this candle break below this candle, we are going to expect lower prices for the next candle. And you can see how the next candle opened, traded inside the key level, then dump. So this is how to determine draw on liquidity when trading the 5 a.m. CRT. This is very simple. Now, what happened the next day? Price broke below this candle, lower prices. Now look what happened. Now if you look closely, you will see that we have um, a key level here. Price cleared this key level here. Price cleared this key level. Yeah, key level are very important. Price took out this key level. And what happened? The moment price took out the key level, now we are going to be expecting price to at least retrace into um, internal range liquidity, because price moves for internal to external. So looking closely, you see that this is the key level here, and the moment price cleared the liquidity, we are expecting the next candle that is going to form to close inside the range. We are expecting the next candle that will form to close what? To close at least inside the range by targeting the previous day high. This is the previous day high of the candle. So I want you guys to learn a lot from this and kindly journal every step I'm taking to build this for you guys. Now price traded into the key level here. Now what happened the next day? You can see what the next day did. The next day opened, the next day price opened, traded into this rejection block. Now you can use your Fibonacci level here and measure this rejection block here. You can see that price came back into 50% of this rejection blocks. This is to show you that the expectancy of price to trade into the buy side liquidity or the previous day high is very, very, very obvious. Now, the moment price opened, this previous day bearish candle closed around this area. Now, the bullish candle opened, came down, and there is a reason why it did that. It's traded into a key level. Now, what happened? We targeted the previous day high. Now, let's go down to the 4-hour time frame where we are going to get our narrative and context, which is simply the dealing range, our break of structure, our key level for us to determine the 5 a.m. CRT. Now, going straight to the 4 hours time frame. Now, looking at the 4-hour time frame, you're going to see that price created the 1 a.m. CRT and the 9 p.m. CRT as a range. So this is the candle range low. You mark it out as a candle range low. So price took out the low of the 1 a.m. You can see here below, this is the low of the 1 a.m. during London section. And this is also 9 p.m. during Asian section. And this is also 5 p.m. during Asian section. So price took out these lows, took out the low of the 1 a.m., traded into this higher time frame rejection block, which is also serving as an order block here. This serving also as the order block, which is our key level. Remember, key level is still important. And where is our target? We are expecting to target the previous day high, which is this high here. Now, price took out the low of this candle, closed inside the range. Now, what is the next thing to do? We have built our daily time frame draw on liquidity. Now we have traded into the 4-hour into the 4-hour time frame. We have gotten our context and also our CRT. Now the next thing is to drop down to the 15 minutes time frame and look for our entry confirmation, which is going to come as a model 1 entry confirmation. Now let's go down to our confirmation. The confirmation is going to come as a model 1 entry confirmation. So I'm going to expect you guys to drop to my YouTube channel and watch on how to trade using the model 1 entry confirmation. Now looking at this chart, this was the setup here. Price came, and what happened? Price swept liquidity. Price swept liquidity, guys. And this was the candle that swept that liquidity. This was the candle after we have gotten our candle range low. This was the candle that swept liquidity. This candle was the candle that swept liquidity. You mark it out. This is now the model 1. The model 1 is simply a candle that docked into a candle, then closed inside the range and was engulfed. Now this is our model 1, and you can see how price came and closed above the model 1, coming back, and price tapped into the model 1. So you are executing your trade, or you are going long from the model 1 here, and you are taking your trade. Your stop loss is going to be below the protected low while we target the candle range high here. Then while we target the candle range high, and also go for a 1:3 risk to reward ratio maximum. So this is how an example of the 5 a.m. This is how I took this trade using the 5 a.m. CRT. Then if you extend it, you will see that price later delivered and targeted the candle range high, and also a draw on liquidity resting above. Now this is another example for the 5 a.m. CRT. Let's look closely for another example. Let's look closely for another example of the 5 a.m. CRT. So determining draw on liquidity is very, very important. Now this is another example for the 5 a.m. CRT. Now I want you guys to pay close attention. This is a range. This is a dealing range. Remember, I said context is very important. Build your range. Build your range. Understand the order flow. This is the range here. We have premium area here, and we have a discount area here. So you can see how price came into our premium level. This is premium. Price traded into the premium level of this range. Well, what do we have here? We have our key level resting here. Let's see on the 4 hours. We have our key level. Let's see. Okay. On the 4 hour, this was a very, very valid key level. And this is the premium area here. You can see what price did on the 4 hour. Price traded into the range. Price traded into this range. You know, this was how the CRT formed. Price took out the low of the 1 a.m., traded into a key level. What is the key level? We have a fair value gap here. This is a fair value gap. Price traded into the fair value gap, and what happened? Closed inside the range during the 5 a.m. CRT. Now this is the 5 a.m. candle. If you look closely, you will see that price took out the low of the 1 a.m. candle here, and also the 9 p.m. candle. So the moment price does that, and this time are always the New York section. You are going to set your time to UTC-4 New York time to monitor the exact accurate time for the price movement at the New York section. So price took out the low of the 1 a.m. here. Price took out the low of the 1 a.m. What happened? Price closed inside the range, traded into our fair value gap that is resting into the premium area, and we have our candle range high here for the target. So you mark out your candle range high. This is your candle range high, and also you mark out your candle range low. This is the candle range low, and we also have our draw on liquidity, which is the ultimate target. So this is the draw on liquidity. Draw on liquidity, DOL. So let's drop down to the 15 minutes time frame where we can get our model 1 and take the trade. Now on the 15 minutes time frame, remember we are expecting model 1. We are expecting to see a candle drop into the range, the candle that cleared the liquidity and when engulfed is our model 1. So looking here, this is the example. This is the example, guys. Now look closely what happened here. Price took out the low of that candle. This was the candle range here. So the moment that candle range low was taken, price closed above. At some point, we are going to use this guy as our model 1. This is going to be our model 1. Let me take out this. Now, price took out this low, came down, didn't close above this candle. Now, what happened? This was where price closed above the candle that swept the liquidity. So you're going to mark it out. This should be our model 1. So you can see that price took out the low here. The low was taken here, which is our turtle soup. On my next video, I'm going to be teaching you guys on what turtle soup is and how to use a turtle soup to frame a trade idea. So price took out this low, closed above. This is now our model 1. But the funny part of it is that price didn't come back to our key level. Price didn't come back to our model 1. So most times you are not going to get the full detail of the model 1. Most times price is not going to come into your model 1, and most times price might tap into your model 1 and displaced. But for the fact that price closed above, and you can see that we took that trade and it was a very, very nice setup. Your stop loss should be below the protected low of the model 1 while you target the candle range high. And you can see how this particular setup is behaving most of the times, and it is paying off. Price extensively moved to the draw on liquidity, and this is like a 1:5 risk to reward ratio. So the moment you understand how to trade this asset, you are going to see changes in your trading. Now this, let me show you guys a setup that happened also during last week Friday. I shared this on my video that I taught. There's a video I taught you guys on Friday on how to trade the Thank God It's Friday strategy. That was a very, very good strategy also. So I need you guys to go and backtest this strategy and see how it works. Understand the draw on liquidity, mark out the draw on liquidity, then drop down to the 4-hour time frame to get your draw, to get your context and also your key level. Then also on that 4-hour time frame, understand the CRT forming around that key level. Now looking at this was the setup that formed last week Friday when price took out the candle range high. Then remember what I said, that when price take out the candle range high, closed inside the range, we are expecting lower prices. And you can see how price took out the high of the range, then targeted the low of the range. This is how the algorithm work. This is how to understand, to frame a draw on liquidity in a particular day when trading CRT. So price took out the high. Now we are expecting lower prices. Then we drop down to the 4-hour time frame. So on the 4-hour time frame, we are expecting to see our CRT form on a key level. Now, what key level do we have here? We have an old high, which is also key level, and it is also a liquidity resting area. So price took out the old high here, which is the previous day high, was taken out, and price took out the high of the 1 a.m. CRT. Now we mark it at our CRT high, then we are targeting the CRT low here, candle range low. So the moment price took out the high of the 1 a.m., it traded into a key level. Then we are going to drop down into a 15 minutes time frame to look for our model 1 while we take the trade. Now, I've shared this video for you guys. I just want you guys to learn a lot from this. Watch this video multiple times and your life will never remain the same in this particular industry. So look at what happened. Price took out the high of that candle, then gave us a model 1. This is the candle range high. So this was the candle that purged into the candle range high, that cleared liquidity and took out the candle range high. So we are going to mark that candle out. This is the candle here, and it is called our model 1 candle. So this is the model 1. So the moment price close below it, so when price comes back into the range, it is known as change in the state of delivery. You can call it change in the state of delivery. You can call it your order block, but not ICT order block. So we are going to take it from here and our stop loss above the protected low while we target the candle range low. So guys, this is how to trade the 5 a.m. CRT. That is the foundation of the 5 a.m. CRT. So make sure you understand the logic behind the candle and not just the pattern. In the next lesson, we will continue with how to use the CRT confirmation and execution. So thank you for watching up until this time, and I will see you in my next video, guys. So kindly subscribe to my YouTube channel because I'm going to be very happy if you guys subscribe to my YouTube channel because it's going to make this channel to grow a lot, and I'm going to teach you guys a lot of CRT that have not been shared in this YouTube space. So thank you guys once more for participating on this video and learning from this video. So in my next video, guys, I'll see you guys.